But what would you do if you had $150,000 to invest? Today's video, we're going to be looking at some dividend stocks that if you put $30,000 into each of these stocks, you're going to be returning almost $16,000 in passive income every single year, which is kind of incredible to think that we're getting to the point where with an investment portfolio, you can create and generate enough passive income to be able to essentially supplement your income when you get into Social Security, being able to supplement that income as well with passive income from dividend stocks. Now, of course, this is looking towards early retirement. If you're looking like I am to retire at 50, we need something to supplement the income that we're having from our jobs. That is going to be supplemented with passive incomes. It could be stocks, ETFs, it could be bonds, could be a side hustle like YouTube that we have right here. So let's get into these stocks that are really showing and making a big part of the passive income portfolios, even if you have a little bit invested in them or if you do have a lot. Now, since inflation continues to eat out the borrowing power of Americans, there is really no end in sight. We thought the Feds at this point would actually do a couple of rate reductions. They started with 7, it went to 5. Now I believe it's at 3, possibly looking at 1, maybe 2 rate reductions this year, which of course are already kind of built in the market, meaning that even if the Feds do reduce the rate 0.25%, chances are the prices of things are not going to change very much, if at all, which is, again, the income and getting passive income out of here makes a big difference. Now, of course, looking at this list, you can see some of them looking at Chase, Bank of America, Silicon Valley. A lot of those are really tough investment opportunities, honestly, where some of them have seen a very difficult time with stocks. This is why I don't invest personally into individual stocks and why I do ETFs. But if you're looking to do stocks, these are some of the really big ones to invest in. First one we look at is Whitehorse Finance Inc. Now, of course, this is a state retirement system of Ohio, which of course has joint ventures. It is ticker symbol for this is WHF. Now, this yields a 12.39% return. You talk about something that is kind of crazy. When you think of CDs running about 5%, even high yield savings accounts, this has a 12.59% return. So looking, if you're investing that 30,000 we talked about earlier, you're going to buy around 2,400 shares, which is going to yield you $3,700 per year in dividend income from this alone. Now, of course, this is headquartered out of Miami, Florida. Whitehorse Finance is a business development company that finances low and mid-tier companies from growth capital in secure notes. So, of course, they are lending money out and they are giving a big return to you. Second one we look at is Carlyle Secured Lending, Inc. Again, this is an aerospace and defense manufacturer, financing its sectors. And of course, it's a private equity parent. Carlyle Group has a very known presence if you're familiar with them. This one is the Carlyle Secured Lending, the CGBD, yields an 11.64%, which again, $30,000 in this will yield you 1,825 shares, which will give you $3,492. As you can see where this is adding up to our $16,000 by just investing that $30,000 in a high yield stock like we have today. Now, as one of the top 5 largest private equity firms in the world, which is the Carlyle Group, also a huge asset money management company that has many industrial sectors all over the world, even looking at multiple defense industry leaders. A couple of them, General Dynamics, Hughes Aircraft, United Defense. It shows a lot of these in here. Now, on the debt side, this is where they use the lien debt, secured notes, second lien secured and unsecured configurations. So they are lending out the money again, similar to what we've seen in the first one, to get a pretty good return on that one. Third one we look at is Nuveen Floating Rate Income Fund. Now, this is one that I wasn't familiar with or hadn't heard of at all. Ticker symbol for this one is JFR. Now, this, of course, is a closed-end mutual fund focused on bond, debt, and credit markets, which a little bit of instability in there, but overall, this has an 11.27% yield. Shares, of course, $30,000 in here would yield you about 3,500 shares, which gives you $3,400 in passive income. Again, well on our way to getting $16,000 a year. Now, this is a fully owned private subsidiary of the Teachers Insurance and Annuity, the TIAA. However, it has spun off a lot of different funds in here, and this is just one of them. With annuities as a key mandate of its parents, Nuveen has a significant footprint in fixed income areas from Chicago, Illinois, and the floating rate income based fund is a closed ended bond which focuses on US high yield debt. So, this again, a little bit different than the other ones that we've seen, not focusing on the lending aspect, but this is focusing on the debt side. So, as we get into number 4, it is Blue Owl Capital Corp. Now, again, this is one that I've heard of before. This is headquartered in Manhattan. Ticker symbol for this is OBDC. This offers a 10.8% yield. So on $30,000 invested, you'd yield 1,933 shares, giving you $3,252 a year, which again, getting really close to that $16,000 that we're getting in the passive income. Now, of course, this one is devoted to the credit markets. It's a business development company, just like we've seen before. Deploys a range of debt origination tools, senior secured loans, unsecured subordination, mezzanine loans, and also preferred stock, warrants, and direct equity. Now they have, it says, using companies of 10 million to 250 billion, which of course is going to be the lending part, to go ahead and fund these projects in the United States. Now, the final one that we look at is Bain Capital I can't say the word, Specialty Finance Inc. Now, this one, of course, this is the presidential campaign, Mitt Romney. If you know who he is, he did run for a presidential campaign before. He was a founder of this private equity fund, Bain Capital, which is number 5 on this list. The ticker symbol for this is BCSF. Now, of course, this yields a 10.6%. $30,000 invested would give you 1,870 shares, giving you $3,200 roughly in annual passive income, which brings us to $15,750 in passive income. So again, when you run the numbers, investing $150,000, getting almost $16,000 a year in passive income can supplement for a majority of us. I mean, you're talking well over $1,000 a month in income that you could be getting out of this, and really being able to substitute your income or substitute Social Security. For a lot of us, that's a mortgage payment that could be covered by just what you're getting in the returns. But of course, the trick is you do have to have that amount of money to go out and invest in here. But it's always fun to play this game when you look at a bunch of different stocks. Now, of course, this is only looking at the dividend side of it, and you have to take that with a grain of salt. And remember that this is only the dividend side of it. When you start looking at the growth factor in there, it could be a little bit different. But looking at that, the total of these 5 independently or altogether as a collaborative gives you over $17,000 on the amount, $150,000 invested, which again, that is over $17,000 in totality every single year that you're getting out of this. But of course, when you look at that Bain Capital, it is the first time that Middle America learned about the funding. Really, it's interesting to see. So they are a private equity and asset firm that has done business since 1984 and had a lot of larger publicized companies, Guitar Center, Toys R Us, Clear Channel, Burlington Coat Factory, that wound up losing thousands of jobs with high interest debt, which again is pretty crazy. So it says, despite the high profile flops that they've had, they remain in the same game since it's been able to really thrive. And of course, there are a lot of companies that rely on the money that is generated and that is produced or lent from these companies itself to go ahead and make money themselves. So guys, I know 150K is a lot to invest, but again, you can split this among a bunch of different companies. A lot of people do REITs. I do ETFs in my entirety, but overall, it's interesting to see exactly how you could make, almost $17,000 in dividends just with these stocks alone. So that'll do it for today's video. Let me know in the comments what you guys think, and thank you guys for watching.